Welcome to this edition of Earnings Express. I'm your host Nickey Mirchandani, and today we'll be focusing on results from online gaming companies and renewable or wind energy companies like Suzlon and Inox Wind. But let's talk about online game companies first. Delta Corp and Nazara Technologies have reported their June quarter numbers, but the pressing issue is the gaming companies' difference of opinions on tax formula ahead of GST Council's second meet on August 2nd. While some of the large companies are now learned to be ready to accept the proposed 28% taxation and are preparing to be applicable on the value of the deposits made by the players to avoid the repetitive taxation, several small companies are of the view that the appeals should be made for the tax to be levied on the gross gaming revenue (GGR) as initially sought by the industry. Sachin Pal, senior analyst from MC Pro here, is joining us here to take through the earnings and the tax implications of the online gaming players. Sachin, good morning. What's your read-through on the earnings between Delta Corp and Nazara Technology? Which company has performed better and why?
Yeah, hi, Nicky. Good morning to you as well. So on the earnings front, yes, so both the companies have delivered a very decent set of earnings. So first talking about Delta Corp, so their top line has been like the best ever that they've reported in history. So the top line has been very strong on that front. Within that segment, the casino business is on a very strong footing. Although there was some weakness on the online gaming front, but that segment contribution is relatively small, so not much of an impact on the overall profitability as well as the revenue front. Coming on to Nazara, again, Nazara had a very phenomenal year last year. They had reported an excess revenue growth almost 70% for the fiscal year FY23. On top of that, they've again delivered a revenue growth of almost 14% for the first quarter of FY24, which again is quite strong from that aspect on a high base of last year. Within that, the esports business continues to be on a very strong footing. So that should continue to drive the earnings growth for the company in this fiscal year as well. Overall, the aspect, we can't really compare both these businesses because they operate in a very different segment. So Delta Corp primarily generates revenues from the offline casinos, and the Nazara operates in the different verticals such as esports and ad tech and the Edopia gaming business. So you can't really compare on an apple-to-apple basis, but yes, both the companies have reported a very strong set of earnings.
All right. What kind of impact would a 28% GST levy have on Nazara as well as Delta, given Nazara is already given, I guess, some sort of clarification with respect to the impact, which is limited to what, 5 to 7% of their revenue? What are they suggesting on the con call?
Yes, so you're right. So the Nazara's impact for the real money gaming or the online gaming, as we call it, is limited to just 5% of the revenue. So not much of an impact both in terms of the top line as well as profitability. Delta Corp's revenue contribution is closer to around 18 to 19% in terms of the top line, and the business is not really profitable at the operating level. So again, that is going to have an impact on their profitability to a slightly larger extent. The suggestion is like industry is actually in a wait and watch mode at present, and there's a lot of clarity needed on certain matters with respect to taxation and everything. So the August 2nd meeting again holds very prime importance from that aspect, and all the stakeholders involved, primarily like the investors, the management, and as well as the advertisers, which are a part of the gaming ecosystem, again are in a wait and watch mode from that aspect. Yeah.
What's your expectation, or let's just say MC Pro expectation from August 2nd meeting? What kind of bearing would this have on the industry overall?
So the industry participants actually have voiced their proposals regarding multiple issues with respect to taxation, the method of taxation. Then when you pull in the money, that it gets converted into digital wallets. So how would that be treated across? What's the impact on the virtual currency or the chips that you play in? So those methods should need a certain kind of clarification from that aspect. So one should also understand that this sector has always had certain issues with respect to the regulation. So it's not just the recent issue, but there have been some kind of bans which have been implemented in the previous years as well. So if you recall, in 2017, Telangana had banned online gaming. So that was again an impact which had impact on the overall sector. Then Karnataka, Tamil Nadu, multiple states within the country have actually implemented similar kind of laws, in fact, in terms of banning the online games, both of skill as well as chance. So it's not something new that the industry has gone through in terms of the changing landscape. But then obviously the August 2nd meeting would give much more regulatory clarity with respect to how the sector trends up with respect to the overall taxation issues and the other lingering things around the current scenario.
Sachin, a very broad question just for the understanding of the viewers out there. GRR and GST implication, how is this double taxation working out? Could you simplify these jargons for us? What does this mean for the industry and how detrimental overall this move could be? You've said that most of the states have already undertaken this and doesn't come as a surprise per se, but just for simplification of jargons, what does that mean?
So just to add a bit of color onto it, so the industry has actually had, so just take Nazara's example around it. So the industry has, like, they have not really had much of an capital allocation towards the online money gaming segment. So they have always followed a conservative policy around that segment of the business. But if you have a look at the current industry scenario, so they are of the view that if the 28% thing goes through, then probably it would have a very larger impact on the smaller players. So 2 to 3 years, maybe there might be an industry reset or consolidation that might happen across within the sector. And then probably the larger players might do the industry consolidation and then be able to drive through this pain across. So there have been multiple issues. Even when the GST was implemented, Delta Corp was paying, I think, a different tax rate, and then the GST tax rate came in, and then the 8% GST was levied on the casino business. So industry has had certain disruptions with respect to the taxation benefits, but they've been able to sail through most of these issues through over a period of time. So I don't think so this case should be any different, but just that the profitability of the smaller players would be at a larger risk with respect to the current stance of the government.
Sure. Sachin, last question that I have is, how are the fundamentals overall shaping up for online gaming companies, and what about the valuations for that matter?
So the online gaming space in India actually has been growing very rapidly. So the CAGR, I think, for the last 4 to 5 years have been in an excess of 25%. So if you just have a look at the India share, it's around close to 2.8 billion at present, and the overall global industry is valued at around 200 billion. So the overall share of India with respect to the global market share is pretty small at present. But then we also have 500 million gamers within the country, and of which around more than 100 million are paying users. So within the overall Indian gaming ecosystem, I think the largest player within the domestic market is the Dream 11, which is also the sponsor of the Indian Premier League. And they have been on a phenomenal growth rate, and they clocked a revenue growth in excess of 50% in the last year and touched a top line of almost 4,000 crores. So coming on to the listed players, I would say that their fundamentals have been shaping up quite decently again. In fact, Delta Corp was actually planning to come up with an IPO for their subsidiary Delta Tech, but that plan has been shelved with respect to the new proposal that has come across. But if you have a look at the core business is in a very strong footing. The casino business, they're also planning to add another chip, which again should both well in terms of growth and profitability. And the valuations of the company are also decent. But then one should also remember that the volatility with respect to operating such a segment needs to be also taken care of from an investor standpoint. So that aspect should also be kept in mind while going ahead and in terms of investing in these companies. On Nazara's front, again, a very strong footing. They have diversified their revenues over the last 4 to 5 years, number of acquisitions, and they also have another strong balance sheet in excess of, I think, 500 crores of cash on their balance sheet. So it's actively scouting out for acquisition, plugging in the portfolio gaps in it. So again, on a very strong footing with respect to the growth trajectory. However, Nazara's valuation are slightly at a premium when you look at on a price to earnings multiple. So probably you can accumulate on dips from that standpoint.
Sachin, just a last thing. It's Nazara Technologies essentially a Rekha Jhunjhunwala-backed diversified gaming company, which has also achieved a significant milestone by surpassing almost 1,000 crore in top line during FY23. Is it on account of the big names along with the strong fundamentals, which essentially have led to the premium in valuation for this one?
So yes, so if you have a look at Nazara, it's a pure play tech gaming platform that they are planning to develop across within the gaming ecosystem. So they've acquired multiple businesses along the way, and obviously it has been backed by the billionaire investor or the big bull, as we call Rakesh Jinwala. That since the IPO, the company's performance has been very strong. The IPs that they've acquired, the US subsidiaries that they've set up across, and recently last year they also ventured into the ad tech platform through an acquisition. So which again is a very large opportunity within that ecosystem. So they're trying to diversify the revenue and add new growth engines to the overall business. So the overall multiples obviously reflect the kind of business platform that they're trying to develop across within the gaming ecosystem. And then the domestic market as well, they have a very strong footing within the esports market, and their position is quite unique from that standpoint. So obviously the valuations of the business partly reflect the kind of moats that they're building across the business, and add to that the cash reserves that they have across at this point of time. So that gives them an ample amount of lever to be able to leverage on the existing business as well as add on new growth engines through a number of acquisitions.
All right, Sachin, that's an interesting conversation, insightful indeed. Thank you so much for taking out the time and speaking to us.
Yeah, thank you.
All right, let's navigate our conversation around the renewable energy space, which has witnessed a lot of traction from the retail community. Suzlon Energy, which has seen break-even on operational front. Inox, which has seen a break-even. Suzlon Energy, which has just witnessed a 7% dip in operational performance. In terms of stock performance in the last 1 year, Suzlon Energy has outperformed Inox. However, both have given multi-bagger returns in this time. While Suzlon has surged almost 215%, Inox has rallied 143% during the period. But to take the discussion forward, we've been joined by Vivek Mashrani, CFA, founder, Technofunda Investing out there. Good morning. I'm going to start off by asking you, within the renewable space, a lot of traction is being witnessed in Suzlon as well as Inox. How do you view the two companies, especially after the earnings, as well as the valuation profile?
Yeah, I think these are two plays in terms of death from ashes, right? So they are just coming back and bouncing back, more like a turnaround story. Suzlon, we have been hearing for a long time that this is, about to turn out, but finally we are seeing that happening. And the same is the case with Inox Wind, which was net loss in terms of EBITDA, and now it is turning positive. So I think as a play, these are more like a turnaround plays, and if they really continue to turn around, valuations is not a major factor to look at, because these are just turning EBITDA positive, particularly Inox Wind. So it is more like playing that re-rating game when the earnings are coming back, and the overall sector tailwinds are also helping these players in their journey.
All right, Vivek, let's talk about the order book execution capability and the debt profile of these companies, Suzlon and Inox. Where do you see better performance? Sure, I'm sure in this quarter you would say it's Inox, which has managed to break even, at least when it comes to the operational level. You think Inox is a better play as compared to Suzlon?
Yeah, I think in my view, Inox Wind is a slightly better play in terms of execution, and I think they've also got a very healthy order book. And another interesting play that is happening there is also they are merging the Inox Wind Energy entity with the Inox Wind entity. So that also is a very nice play which is going on inside this company.
Sure. Now, a very broad-based question. How is the entire renewable energy space stacking up for you? How promising does it look for the second half of the financial year? And if I'm not wrong, Suzlon has guided for the remainder, Inox has guided for the remainder 3 quarters to be better than that of Q1. And also a little bit lower on the debt profile. Probably they're looking at a net debt-free company. Promising outlook growth out there. How are you viewing everything put together?
Yeah, see, I am looking at this entire space, particularly green energy and the wind side of the space, particularly as a more like a mega trend. See, there is no doubt that these sectors are going to be in demand for next few years. So as an investor, I would probably play it more from a longer term perspective and a multi-year turnaround story rather than just looking at 1 or 2 quarters. Of course, the future is bright for next few quarters also. But if it really turns around for a longer period of time, and given the sector tailwinds are there, I think it's more like a bigger long-term play than rather a short-term play, how I look at both these plays actually.
Well, how are you looking at Suzlon? Because I believe that stock was once a 1600 rupees odd level stock. Now
Yeah.
it's reduced to 1920 rupees, and people are all gung-ho with stocks like these. Do
Yeah.
you believe in the growth story, or you think it's more of a punter's bet?
It could be a bit of punter's bet. It's a mixed thing. See, there are turnarounds again. If you see statistically, less than 10 to 20% of turnarounds actually work out, right? And that is where those which don't work out, we feel like there is probably a lot of enthusiasm and it did not play out. So it is matter of really that turnaround playing out, which will create that kind of multi-bagger returns. And otherwise, again, it will go back to its zone and again, it will consolidate or probably move into the downtrend.
Sure. Overall, between the two, you said you like Inox, right?
Yeah,
Is
I
there
prefer
anything?
Inox over Suzlon because of the execution capabilities and the way the delta is getting created in terms of turnaround. So I'm playing more on delta side than the kind of execution which they've done so far.
Yeah, because there are a couple of developments which are taking place for Suzlon also. A, it has a market share of 33% in the domestic market. B, it's also got, the whole thing when it comes to the leveraging is also a good show which is played out for Suzlon. Like the leverage is now merely 1 times the debt to EBITDA versus 10 times that we've seen in FY22. You think Street has already factored into the stock prices, and it's Inox Wind which is probably a little less looked at by the retail community?
Yeah, I think so. See, just since April, May, we have this stock almost doubling, right? So Suzlon was somewhere around 7, 8 rupees when it comes to this year itself. We are talking this year, April, May, and right now we are in what July end, and it's already doubled, right? So a lot of things, optimism have already got factored in, and of course, it can move from here also if this thesis continue to play out and really this turnaround becomes much stronger than anticipated. But yeah, to an extent, I think a lot of things are factored in already in Suzlon particularly.
All right, Vivek, we're going to just leave it at that. Thank you so much for taking out the time and speaking to us.
Thank you so much. Thank you so much.
Well, that was the edition of Earning Express. We spoke about host of things, Inox and Suzlon also specifically, along with online gaming companies. And the expert view is right now, Inox Wind is more preferable bet as compared to Suzlon, given the break-even that we've seen in terms of the operational performance of the company. But with this, it's a wrap. Thank you so much for tuning in.